Hi, everybody. Welcome to this week's Middle Class Investor. It's Sunday, March 15th, the Ides of March, and currently recording at about 15 till 11 Central Standard Time, Texas time. Anyway, it was another down week in the market. The reason I have this really long-term chart, this was the March 2009 low, and you can see that we've been in a steady uptrend ever since then. Even this sell-off in 2011 was a higher low than this low right here. So we've had a pretty good uptrend. The market's starting to show a little weakness. I think the probability is still that this comes to a higher low and bounces. But you can see I've got important low marked here and recent high marked here. And what we're looking to see happen is have either this recent high, have it bounce and take out this recent high into this resistance area, or have it continue to sell off and either stop in this area, or it could just go straight through and actually take out this low way down here. So a couple things to note about this market. The MACD or the RSI here is turning down and crossing through the red line here, and that it did it back here, but it didn't do it very decisively. Here you got a pretty steep turn and down. So that always gives you a little insight into the internal market momentum. It looks more like this one that happened back here, and you can see the steep downturn that led to. Now, the market doesn't go just straight down, although it kind of looked like it did here, didn't it? But generally speaking, it bounces its way down, just like a ball bounces down stairs. So I'll show you a little later on a short-term chart what I see here. It could hold this support line. In other words, we could get a little bit more selling next week, end up holding this support line, bounce, but not make a new high, and then come down. There's a couple different scenarios, and I just want to go through them so that if you're watching the markets that closely, you'll know what to expect. All right, let's look at the 10-year Treasury. 10-year Treasury yield. Here's what we're calling that important low back in 2012. The market had a down week in yield, so an up week in bonds. And this is, this is typical of a market movement. I mean, it doesn't just go straight up. We just talked about that. This is an inside day or week. It's a weekly chart, so it's an inside week. And if we get a close above last week's high, top of that red candle, then this is likely to continue. In other words, what could happen is you could get another red candle, but let's say it looks like let's say you got a red candle and it looked like this with a tail up here like so. So it would have taken out this high, the top of this red candle, but it would have closed below this red candle. So it's just a distinction I'm making here. If we get a close above this high, then this trend is likely to continue. But if we get something that looks like this, the jury's still out. So just make sure you understand the difference there. These extremes in the markets where the pivots take place are very important, and it's real important to understand where you're wrong. So let's say my expectation is that I get a close above, I used the wrong tool there. Let's say I get a close above, so we get a white candle, and it looks like that. Well, then what I'm not expecting to happen is the next week to get a candle that looks like that, okay? What I'm expecting to happen if I get a candle that looks like this is the next candle I get going to look like this. So it's just important to understand the distinct, what does this mean when you have an inside week and then when I have a close above this previous high from the inside week? It means trend's likely to continue. And it takes a while to get used to all these little rules, but it does help to know them because the market tends to follow them. It looks like the stochastic here, this is just an oscillator. It doesn't matter if it's an RSI or a stochastic or whatever. It doesn't really matter what it is. Let me put the chart. Let me put the one we normally look at. We normally have the RSI, so I'll stick to that one. And if you look at the RSI, it looks like it's curling up still here a little bit. So maybe there's still some strength here in the bond and the interest rate market to go higher, which is what we're expecting. Sorry about the sniffles. I had the flu last week, and let me just tell you, that is awful. From about Wednesday till Saturday morning, I was down and out, not feeling good. So if I sniffle or cough, I apologize up front. All right. This market I want to continue to stress is probably the most important market other than the dollar, and it's related to the dollar, by the way. The dollar and this market right here are the two most important markets right now going on in the financial world. And when you're talking about the dollar, we're also talking about the euro. So let's go ahead and look at the euro US dollar. My goodness, is that a fall? That is a huge move for a currency right there. Without a central bank doing anything manipulative to cause that to happen. Let me go back. Let's go back 20 years on the euro. And what I want to show you, I drew this line in here because this line, to me, it's a very critical support here. I mean, it can breach this line a little bit, but it shouldn't. It can't. I really don't think it needs to breach it much, because if it breaches it much, like if we have another week like we had last week below this line, we're coming all the way down to these lows here. What is this low in euro? The low here was 0.823, so we're coming below that. If we get too much more action below this line, and the reason is it's just supply and demand. Okay, so what happens is you can see this little bulge that comes below the line. So all along in here, people are buying and selling, buying and selling, buying and selling. So just try to envision, let's say there was buyers here, and then it started to sell off, but they held their position, okay? And then maybe they started selling, and then the market started to take off. Well, some of these people that live through this little bubble down here, they might be still holding these, and they're looking at that going, man, there ain't no way I'm going back into this. So what happens is they become sellers once you start getting into this area here. So think of all this right here as overhead supply, and this line of support is just you can see the vast majority of the price action is above this line, both on the front side and on the downstream side of this little bulge here. So there's just a lot of overhead supply once you break this line. So I'm expecting the euro to hold this line right here, but I got to tell you, that's a big, that is a month. This right here, this is the last month. This has got to be the worst month. Well, no, not the worst month, because there was 2 months ago that was worse. But this month right here and this month right here were two horrible months for the euro. And if they get another one like this below this line, you're going to see the euro go all the way back to this line I was just talking about, to below this point right here, below this 0.823 area. So if you've had your eye on, like I've had my eye on Benelli shotgun for, I don't know, maybe 10 years. I'm not even kidding. Maybe not quite that long, maybe 8 years. And they're made in Italy. And my guess is they're going to start looking a lot cheaper here in the U.S. And I need to go look at some now, just in case we get a bounce here and we don't ever visit these lows. But man, if we get down into this area, that Benelli shotgun is going to be cheaper than it's been since 2001. So I'm going to run out and buy one. Let's see, what else can we look at? Since we're talking about Europe, let's look at Germany. Germany still looks strong. Germany is just the rich uncle, on the block, and so their markets are strong. They're the best house in a bad neighborhood, basically. And to me, it looks like the euro. Germany. I'm looking at this move right here. It looks like it's got a new high in here in its future. So it took out this high with this high over here, but it looks like to me this high is going to get taken out, and then the euro is going to, the Germany is going to at least fall back to this area around 25. So let's look for the straw box up here. Let's look for the euro to come into this area. Not the euro. I keep saying the euro. I'm sorry. Let's see. Let's look for Germany to move into this area, and then from here sharply pull back to this zone right below this low here. That's what I would expect for Germany. Looking at the UK, to me, we've talked about this before, but you can see this channel that we've drawn in here, even though it's on a parallel channel, it's a channel nonetheless. And the UK market broke that, and last week we were talking about Fibonacci retracements, and we had this box drawn right at the 62% retracement, and we even said then that it didn't look like it was going to continue to make it up to the up and into that box. It came up a little short. Sorry, I've been looking at monthly charts, so I'm zooming in on a weekly chart now. So you can see from this zoomed shot here that now the box is very arbitrary, so the fact that it didn't touch the box doesn't really matter. In that MT Predictor software, it's a little less arbitrary. The box is actually drawn based on some mathematics, but I'm not doing that here. I'm eyeballing it. So you can see that the UK, it broke this trend line up here. That's what this dotted line was up here. Broke it back here somewhere, way back over here, and it kind of chopped up here and failed underneath that old trend line. So old support, this was support, okay, but once it's broken, it becomes resistance. That's a technical analysis tenet. So you can expect the euro to come down and make a low somewhere below, not the euro, the UK, somewhere below this low here. We'll zoom out and get a better look at it. In fact, let me zoom out a little bit and see if I can move this box without getting. Tell you what, that RSI line is up there. Let's move it right. So now we want to look for support right in this area. Now, let me caution you. We might not get support in this area. Because this could be a potential trend change in the UK market, right? So you've got to move down, you've got a correction back, and maybe the correction is not over. It's possible that just looking at this, it almost doesn't look like there's enough moves in here for this correction to be over. So it could be that this box, we need to move it kind of up into this area here. And then we're going to get a correction that's going to weave its way back into this area and then come down. And I would say if it does, then this next move down could be quite a bit deeper than this support box. Okay? Let's look at Japan. Japan, there's a lot of inflation going on in Japan. We've talked about this, and the market has broken out. The Japanese market has broken out of this consolidation range. And generally speaking, you take the width of this box and you add it to the breakout point, and that gives you your target. So, and that's just a technical analysis thing as well. So the width of this box is let's see, what is that? I thought I could measure. I thought it would give me. That is 1060. The upper line is 12. Let's just call it 1220. So what is that? That's almost 160, right? So 160 from here would be 1280. Let's call it. So golly, it's almost there already. That just doesn't seem right. Visually, that doesn't seem right. I wonder if it's because it's in a log scale. No. Seems like it would be more up here. Anyway, just visually to me, it looks like Japan could come up into this area, off of these highs here. So this 1350 area, and a little higher. So 1350 to 1500 to 15, let's say. So that's kind of what I'm looking for out of Japan. Let's see, what else do we have? Let's look at volatility. Volatility is another good predictor of the market. I'm going to get off this 20-year chart and go back to a 5. It's messing me up a little bit. So here's volatility. We've had this green line on here forever. We've also kind of shown that we have this little downtrending section. So you kind of got volatility compressing, as you go into this tighter and tighter apex of this line and these lines here. So, it looks like it could just go either way. If you notice, volatility really didn't close, decisively above this low week here. So we could roll down and then go up, but I would say the market's probably got some room on the upside here. It may not go to the upside immediately, it may go down a little bit and then back to the upside, but it looks like to me it's volatility, we really shouldn't look for the market to start going down until volatility is at least up here around 20. And right now it's only at 16. So sounds like to me there's some upside in the market. Again, we're going to look at some shorter term charts here in a second and just confirm some of that. In fact, let's just do that now. I don't think there's any need to go look at FXCM or any of those things anymore. Let's look at the dollar first. So the dollar has been in the news, which is interesting because we've been talking about it for a while, and now the pundits are starting to talk about it. So you can see we've broken out of this resistance area here. We got hardly any pullback at all. And what do you see here on this little swing down? Do you see any, are there really any pivots there where the market turned? Like, this is a pretty good pivot. The market went up, went down. This is a very strong pivot. So I kind of put this resistance area off this pivot. These other pivots, this one, these are still valid, but they're fairly weak pivots. So to me, this tells me the dollar is on its way to this 121 area. which I don't know if that's an all-time high or not, but it's very, very high. We haven't seen that high since 01, and that probably means gold is going lower, and oil's going lower. I mean, all these commodities are going to be going lower on this information. So, at least in terms of U.S. dollars. So, I don't know. I don't see a whole lot of stopping the dollar, although, usually when you get a real parabolic move like this in a market, the market, won't continue much longer. It draws a lot of people in these moves, and then it swings hard the other way. Now, where is it likely to swing to when it pulls back? I think that's good to know. And just looking at it, for me, remember we talked about this this pullback area here. I actually thought it would pull back more like down toward 92, and it did more of just kind of a sideways pattern and then broke out of it. But I'm going to erase this for now because it's just in the way. And I'm going to say if the dollar pulls back, we're going to see the dollar pull back into this area here around 92.82. And why don't we just put a line on there because that's easier, if that's all right with everybody. So I'm going to put a line here right at about 92.82. Stop there. 92.88, close enough. And I would look for the dollar somewhere in here to pull back to this area and then resume higher. This is really bothering. I mean, I'm telling you right now, this is really bothering the financial community. This dollar move. Nobody expected it. Even, even a guy I really like, Peter Schiff, has been talking about the dollar demise, and I think ultimately he will be right. The dollar probably won't survive long term. Excuse me. But we really don't know how long that is. It's really hard to put a time frame on these types of events, and it depends on how the government reacts to subsequent events from here. So, I know it's very difficult to predict that. All right, let's look at crude oil. Excuse me. Sorry about that. We've been waiting for a bounce into this area. I don't know if we're going to get it. It looks like to me crude oil wants to make a new low below this 43.5 area, and I suspect we're probably going to get a new low. Then maybe we get a bounce. We'll see. On a daily chart, crude oil looks like it's building a bottom. In fact, to me right now, it looks like it's going to take out pretty hard here. If this is, again, just some technical analysis, this is something I've mentioned a number of times, but notice we got a decision point here, and the decision point comes to the previous pivot, which it did. Okay, so that's the first move up. Okay, and then what is this? This is the first correction into the first move up, which typically means this move is pretty significant. In fact, let's just measure it using the MT Predictor software. Here, let me put the DP on first, and you'll see where the software predicted that market would go. And it pretty much went a little higher, which is not uncommon. Let me zoom this up a little bit so it's easier to see. There we go. So you can see that the software predicted good move. It puts your target here at 52.48. The market actually went to 54.94, but there's no way to know that. So basically what you do is you take this decision point off the previous pivot, and that's your target. Now, if this is a wave 1, let's see, up wave 3, here we go. So this would be 1, 2, 3. So see what it's saying here is that crude oil is going to go to at least 61. So $61. So if you look at that on the, let's go back to the weekly chart. That's right in there about where the wave 4 is on the weekly chart, right? $61 is right there. So let's put a line there just for kicks, and we'll monitor that. $61, right about there. My experience is that it will go higher than that. It'll go probably up into this area. So we'll see. If you trade, if you're trading, you don't trade for the long ball. You would trade to this place here where it says the target is. But if you were trading a longer term chart and the longer term chart told you that the target was up here, then you would trade to this target. So it all is dependent on the time frame that you're trading. Because, for example, this is crude oil. Well, crude oil, futures. Let's see what the current month is. Current month is April. So, if your long-term trade went past April, then that's not going to do you much good, right? You're going to be out of the money. So, it just depends on what you're doing. I don't want to get into that too much because I think that'll confuse people. Unless somebody writes me back and tells me they want to get into it a little bit. The DAX, we already looked at Germany, but the DAX looks really strong. I think it's just the best, it's the best house in the worst neighborhood kind of thing right now. Gold, looking at gold, same kind of thing with crude oil. What's interesting is these commodities are all kind of shaping up to be the same. Although, I will say, because of the longer term history of gold, if the dollar continues to go up strong, gold's probably going to make a lower low. Probably not going to bounce. But it did break this down trend line, and to me that's still strong evidence until it takes out this low right here. So let me zoom in on that so you can see what I'm talking about. Until it takes out this low right here, to me, any trade above the previous week's high is a valid trade. So you could have said, okay, if I close above, in other words, let's say we got a candle like that, then that would have been a valid trade to put you in gold, okay? You can still do that this week. So if next week we get a candle that looks like, even if it goes lower, but it closes right here, it's valid to get into gold right there, in my opinion. And that's just my opinion, by the way. That doesn't mean it has to happen. It's just, let me explain something here. You have to. One of the things you have to do when you're looking at the markets, you have to think in terms of probabilities, and you have to think in terms of risk. And if I'm looking at this chart this week, okay, and next week gold looks like this, in my mind, the probabilities are it's going like that, okay? Now, if next week gold makes another, it doesn't even break this high, and makes another, sorry about that, and makes another one of these, okay, and takes out this low here, well, then gold's going lower. We can take a DP or a support area off of this previous pivot, and we can say it's going there, and we can look for a bounce from there. But you don't know what the future is. There's no way to know exactly what the future is. So all you can do is think in terms of what is most probable to happen given what has happened in the recent past here. And these pivots are very helpful in helping you determine that. And then your entries where you decide where you're going to be long or where you're going to be short, that's all based on probability. And so, for example, what I was just talking about, if I got a candle that looked like, well, I did it wrong again. Keep pushing the wrong button. If I got a candle that looked like that, then the probabilities are that this trend has, this downtrend has come to an end. Notice every single candle, not one candle closed above the high of the previous candle. See that? Here's a high, okay? Here's a lower high. 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 All I'm saying is that if I get a higher high right here, I'm saying that the probability of that this particular trend, this downtrend right here, is over, and the probabilities are it's a good risk to reward. But the probabilities are that this market is now going to move in the other direction. I mean, look at it over here. Now, does it always work? No, because look, this right here, well, this was kind of close. This was like the high was close, or the close was close to this high. The close here was below. But you can analyze each one of these, and what you'll find over time, the probabilities are better if you make a decision like this. And it's very simple to make this decision. You can see here that you would have been wrong, right? You would have got in right about here, and the following week it would turn down, and then it would turn down again, and you would have got out, let's say, in this area here, okay, and you would have lost money. But it was still a high probability move that this particular downtrend was over and a new upswing was developing. So, and it takes some practice getting to just to begin to think that way, and even now for me it's difficult. I sometimes think I see something and it's not actually there or whatever. I mean, there's mind plays crazy tricks on you, and you got to be disciplined. But I just wanted to take the time to show you that in that particular downtrend, there was not one high that was higher than the previous week's close, and so it's just a pretty high probability move that if you get a close above this last week's close, that now this downtrend is over and we got a new upswing developing. And how far is it going to go? I don't know, but a good place to conservatively pick your target is right there in that particular example. So you would have got in gold, let's say at 1182, and you would be out of gold at, say, 1328. Okay? That's an example of how you might, and you can, again, you can trade your IRA this way. You can, there's a lot of things you can do this way, and it's fairly conservative, and it won't create a lot of activity, but it just brings a little discipline, because if you're long and you start getting something like this, I mean, do you really want to be in this? Do you really want to be long in this market going through this kind of sell-off right here? No. Who wants to be losing money? Who wants to be in gold long at $1,796 and then ride it all the way down to $1,192? I mean, nobody. So, okay, let's look at, this is the 30-year Treasury. And just like along with interest rates, you know what? Let me pull up the ZN. Since we're talking about 10-year Treasury yields, we might as well be talking about 10-year Treasury bonds. I didn't catch that before. So the 10-year Treasury, this is the daily. Let's go to a weekly. So last week yields were down. That means bonds were up. And we can see that on the chart that bonds were, for the most part, up these few days right here. Let the chart load. There we go. So bonds were up this week, and you can see that we've got basically this stair-step pattern. This was the pullback in interest rates, okay? But now we've had this sharp move. We're waiting. Is the correction over? I don't know. But let's say this is the first move down now, and we get a correction into. You can almost. Let me help you see this if you don't see it. But you can see. You can kind of see something that looks like. Well, first of all, you see here that the market went down. It's hard to tell whether it went down and up, but it likely did something like this, and then moved up part of this somewhere in here. Yeah, it won't let me draw that, and then made this move down, and then you can see it kind of did. That was a bad line. You can see it kind of did that, and then did that. Well, where's it likely to go? It's likely to go off a box, off this pivot here. So, we could see a pullback. We could see a pullback into this zone right here, and so I would look for bonds to be strong this week. They might be kind of up a little bit and then down, and then might finish the week up, but not just straight up, but kind of up and down, but finish up, and then. But I would look for bonds to move into this 128.20, 215 area, and then maybe pull back again, maybe run up even higher next time, and then fail. So you still got, it's still not urgent that you're out of bonds just yet, but the time is fast approaching. And I don't know why I can't. There we go. The time is fast approaching, in my opinion. Doesn't mean anything, but I think it's fast approaching time that you don't want to be in bonds. You're going to lose a lot of money. So, with that, I don't think there's anything else to cover this week. Here's the Euro future, and that's just brutal looking. I don't even know what to say about that. It's awful. Wonder if we can do a monthly. I don't think there's enough data. I mean, it's almost like you can see here that the software picked up a TS3 signal. See where that target is on that. Yeah, so it went to the. Well, this is interesting. I mean, it could be that this is an example of what I'm talking about on that first move down, and this is in this particular scenario, if this is your first move down to this area, and you get this pivot, this double zigzag pivot, and then this next swing is usually this says typical wave 3, so it's usually very large relative to the first wave down, and it could be that we're going down into this area, but my goodness, that is a long way to go. Still, we're talking about 0.9339 on the euro, and there's a lot of selling pressure here on the strength band. So, I mean, whew. I mean, maybe the euro is going even lower. Feel bad for the Europeans because they are getting poorer by the second. I'm not even sure they know that over there, but they are definitely getting poorer. It's going to become, I don't know how much of their economy is imported from the U.S., but fuel has just got to be going sky high over there because they buy fuel in euros, and which means they have to buy dollars with those euros and to buy oil, and so yeah, they're hating that. Their oil's just got to be going through the roof over there. So that's it this week, everybody, for the middle class investor. I feel like I'm starting to ramble. It could be I'm still feeling woozy from my illness. I never did show you all that shorter term ES that I wanted to show you. Here it is right here real quick. So if I click on this on the chart, if I click right here on this pivot, right there, you can see here I've got a 1, 2, 3, 4, 5. Okay, so 5, if this is in fact a 5, and there's no way to know it is, it's not complete. The question is, the question I have, if I'm a trader, is, and you don't know. This is why it's so difficult. That's why it's, I can click on a chart and I can draw 5 waves, but at the end of the day, what I've got to decide is, well, do I short it here, or is it likely to move up like this? In other words, this isn't the top of wave 4. This is the top of wave 4. And then short it. Okay? And there's no way to know. Okay? There's just no way to know. And so this is the difficulty in trading. So maybe you guys guess. Maybe you can tell me which way the S&P 500 is going to go next week. My gut feeling, odds favor. If you want to flip a coin and say, okay, Seth, guess. My guess is that the move to this wave 4 it looks like this. Oops, that's kind of a bad one there. But it's looking like it's this, and then we're going to get this. But I could be wrong. I could be wrong easily, and it could be that this is in fact wave 4, and it's just making a little move, and it's going to go lower from here, from this point right here. It's going to go lower. Whoops. Keep pushing the wrong buttons. It's going to go lower right here. Boom. Like that. But in my opinion, it will take out this low probably this week. Well, I can't say this week, because if it does make its way up to here, it's going to take a little longer for it to get all the way down here. But in my opinion, it will take out this low, whether it's this week or next week. And then we're going to get a really strong bounce. That's really, when you get these really strong bounces, that's when the pundits on TV are like, oh, it's all over. There's no more selling. You should have bought the dip and blah, blah, blah. They'll have somebody on that was talking about buying the dip this week, and they're going to call him a genius. You said buy the dip. People should have followed your advice and blah, blah. But the reality is the guy just has a bullish bias, and what's worked for him for the last several years is just buying the dip. And that's true. It's worked for everybody. But it doesn't work forever. One of those dips you buy is going to be a loser. A pretty big loser, probability-wise. So, anyway, I would say certainly if we take out this high, then the scenario that went like this, the zigzag A, B, C, up to this wave 4 up here. And the other reason I think we're going to have that is you have this huge gap that's open right here, and there's just the market always tends to fill these gaps. So you got this big gap, and I think the market just wants to. And not only that, but these waves in between, these pivots, these declines or accelerations in between the initial move up and the next move up, these right here, these B waves, are usually very, very steep like this and very dramatic. And that was very, very steep and dramatic. So I'd say the odds favor that scenario right there up to about 2070. Maybe 2071, something like that, and then you're going to see a sharp sell-off. So we'll see. It's fun to guess and then talk about it the following week, and kind of compare where we were thinking, and then what actually happened. So that's it, everybody, this week. If you've got any comments, please write in. Here's the YouTube channel, Middle Class Investor. I'm trying to be more diligent about putting our little, so it's easy to see the videos. It's easy to identify them. But and I also tweet it so that if you're following me on Twitter, you'll see when it uploads. All right, everybody, thanks a lot. Appreciate you coming in, and hope to see you next week. Take care. Bye-bye.